Recession fears spark a global sell-off in equities. The Indian market too opens lower. All sectors trade with losses, while PSU banks are the top losers today.
Oil and gas is the only sector trading with gains as the government cuts windfall gains tax. Reliance is the top Nifty gainer. ONGC too trades higher.
Nava gets a relief in a long-standing arbitration battle with ZESCO, the Zambian regulator, will now discharge arrears of over $500 million to the company. The management tells CNBC-TV18 the money will come in tranches by August 2023.
GMM Pfaudler's promoter will sell near 30% stake in the company. Deal partly completed via block deals. The stock trades lower by about 10%, 14%.
Deepak Fertilizers announces a demerger of its mining and fertilizer business to simplify the corporate structure and realize the economies of scale. The demerger will take place in a 1:1 ratio.
Good morning, you're watching Chartbusters here on CNBC-TV18. I'm Sonal Bhutra and with me is Manglam Malu. Manglam, good morning. We looked at the global cues and they were indicating that yes, it could be another down day for our own markets, and that's exactly what has happened. The Nifty trading with cuts of 90 points, and it really is the broader market, the mid-cap side of things, which are underperforming today. So the mid-cap index down 1.5%, and for every 1,100 stocks in the green, there are around 1,900 stocks which are in the red today. The index is at the day's low, and this weakness in the mid-cap index that has continued. Yesterday as well, this index was underperforming, and today again there is some weakness there. So we'll have to see which way things go. But for now, the texture of the market continues to be in the bearish zone.
It continues to be weak. You know, the interesting part was that it opened lower and then there was a swift recovery. However, that recovery has been sold into, and that seems to be putting fresh questions to all the bulls as well. So that is something that actually, you know, we'll put forward to Manas Jaiswal as well. Manas, this morning there was a dip. Quickly, as the template was over the last few trading sessions, the dip was bought into, but then that was equally swiftly sold into. Now we're back, you know, just about 30 points from the lows of trade, and the mid-cap index, like Sonal said, has worsened. Almost 2,000 stocks declining right now. Your thoughts?
Good morning, Manglam. Good morning, Sonal. So first thing, I think the trend is definitely negative because last week also Nifty witnessed some profit booking, and on the weekly chart it made a dark cloud cover pattern. We saw some recovery, I think, in the starting of this week, but Nifty could not sustain above 18,800, 18,900 mark. So now when we have seen a lot of selling pressure, Nifty has fallen below 20-day moving average, and it has fallen below the neckline of head and shoulder pattern on the daily chart. So I think on the both charts, daily and on the weekly, we have seen some sign of reversal. So I think one should be very much cautious and one should not buy on this decline. I believe that even at current levels, one can definitely create short position. Stop loss should be around 18,450. The first target comes near 18,175, which is its 50-day moving average. However, I feel that Nifty can even go down and test 18,100 also. So I'm bearish on the markets, and even Bank Nifty is looking weak. And I believe that from current levels, you can see almost 500 to 600 points decline in Bank Nifty also.
Okay, so 500 to 600 point decline in Nifty Bank also. That index has been outperforming so far. Manas, in a scenario like this, when you are advising your clients as well not to build in fresh long positions, what would your individual technical picks be?
So there are two recommendations, and both are sell recommendations. First is a sell call on Kotak Bank, because Kotak Bank has been making lower tops and lower bottoms from the level of around 1950. Now, since stock has broken its 200-day moving average, I believe that you may see some more selling pressure. Kotak Bank can go down and test 1800 mark. So at current levels, one can create short position. Stop loss should be around 1861. And second is the sell call on M&M, where stock was facing resistance on higher levels, but today stock has broken its 20-day and 50-day moving average. So I think here also you may see some downside. M&M can test 1225. So take a short call here. Stop loss should be around 1286.
All right, take that point. Thanks a lot, Manas, for joining in. Let's move on and shift focus to our special segment. Then colleagues from Money Control Pro get you a few ideas of profit. And today we have Jitendra Gupta.
Hi, thanks. I think PSU defense stocks deserve attention. We like Hindustan Aeronautics, which is a perfect blend of what most prudent investors look for an investment, a dominant and consistent player, the low balance sheet risk and a business that could last over very long period of time. The company is the largest player in the defense aeronautics and engaged in many of the government's flagship programs. Over the years, the company has developed superior technical capabilities to manufacture and service most of the critical aircrafts required by the Indian Air Force and others. With the government's focus on developing domestic manufacturing and, of course, restricting imports, the company has emerged as a strong long-term play. It is sitting on an order book of close to 83,000 crore, which is close to 4 times its annual revenue. Interestingly, the order pipeline is equally strong with the expected advanced light helicopter, utility helicopters, and many others. Further, it is expanding its capacity, manufacturing capacity, of course, the repair and other capacities it is building over the next 2-3 years. That will take care of its growth. In terms of valuation, it is trading at about 12.5 times its annual, FY24 estimated earning, which is quite good considering the quality of the business and strong order book.
Jitendra, thank you so much for joining us with that idea for profit. With that, we'll slip into a short break. Up next, we'll be joined by the CEO of Puravankara, Abhishek Kapoor, to discuss the company's business outlook and trends in demand as well. Stay tuned.
Right, with that, let's talk about the realty sector. Jefferies has recently issued a note expecting residential realty sales to actually hit a new high. To understand how on-ground demand trends are panning out and get an outlook for the new projects going ahead on this sector itself, we now have with us the CEO of Puravankara, Abhishek Kapoor, joining in. Abhishek, thanks a lot for joining in. Now, the report paints a pretty picture for the sector. For you, on the ground, how has demand been in the third quarter? I mean, is the quarterly average of the third quarter turning out to be better than the first quarter, the second quarter, and what you expected?
Mangalam, thank you for having me on the show. So you're right, the demand continues to sustain. We are definitely seeing the uptake improve. Typically, the festive season and the December and the March quarter are the quarters which typically do the best, the second half of the year. In fact, the first half of the year was very, very encouraging in terms of the financial year. If you look at the calendar year, in fact, the first 3 quarters of the calendar year, and you compare it with the previous numbers, we have already crossed the sales done in 2014 in terms of number of units. Of course, in terms of value as well. So, we are seeing continued sustained demand as far as the business is concerned. Of course, added to that will be a whole lot of new launches by the industry, and of course we are part of that, so we're also adding new launches, so we'll continue to see the uptick in the numbers. Yes.
Okay. Abhishek, just some ground check that I wanted to do. What is the conversion rate for Puravankara? Say if 10 people are coming to see the flat, how many are actually buying it?
So it depends on new launches. The conversions are much higher. It could be anywhere between 20 to 30%. But if it is a sustenance project, it would be anywhere between 7.5–8% going up to 11%. So it depends on which project, which location, and the price point, etc. But generally, that's the trend.
Okay. How much, when you talk about price points and you talk about newer projects seeing higher conversion, what kind of price hikes have you seen in quarter 3 so far? And considering the inflation and the hiked rate scenario that we are in, do you think it's still in the hands of developers to go ahead and push prices?
See, if you just look at the last quarter and last 2 quarters, we have seen a price appreciation of an overall between 6 to 8%. Now, a lot of price increase, which was on the behest of increasing commodity prices, is kind of out of the way, because we are seeing stability in the commodity prices now. Having said that, what typically happens with real estate, and we plan it the same way, is from launch to completion, you typically see a price appreciation of anywhere between 50 to 60%. And that is dependent on the progress of construction and closeness to the possession timelines, right? So that trend will continue. You will see price appreciate in the projects which have been launched, and as they progress, and they appreciate. So you will continue to see that trend. But yes, inflationary pressure is not there that much now. Now it's more about ensuring that your margins are there, and as the project progresses, you appreciate.
Can you throw some light on the commercial segment now? You already have about 8 lakh square feet which you've taken to the market. You also have a plan of almost 2.1 million square feet coming in early next quarter. So what are the kind of rentals that you currently make? What is expected once these come on stream?
So, right now, these are both projects which we are expecting to complete between 24 to 36 months from here on. And as they complete, we are already seeing a robust demand for these projects. In fact, the 8 lakh square foot project we are looking at largely selling, both leasing and selling, and both the opportunities are there. There's a robust pipeline of clients who are looking at purchasing and leasing. Whereas the 2.1 million, the strategy is to hold and lease. And this is in a very, very promising location of North Bangalore, which is where the growth is, because the airport is there and the whole growth is going northwards. So we expect that by 36 months, as we complete the project, we would expect it to generate a lease rental of somewhere in the range of about 65 rupees a square foot on average on a 2.1 million square foot. So you're talking about, say, 13 crores or so on a monthly basis.
Okay, 13 crores on a monthly basis. That is from both the projects or just the 2.1 million square feet one?
We're talking about 2.1 million.
2.1. Okay. You are also looking at a private equity partner for your commercial segment. Anything that is finalized here? Will you be selling a complete stake? Any other sort of structuring that you're planning here?
Yes. So, from commercial point of view, we are looking at creating a platform wherein we intend to acquire more assets and develop them over time and create a portfolio of lease rental. And that right now, the talks are in progress. So we intend to scale up that business. And then, of course, this 2.1 million will be the starting point for us.
So will it be a partial stake sale? And once it is done, I mean, once it's on stream and the visibility is there, that is what you're looking at, right?
Correct. Absolutely. You're right.
So
this becomes, yeah.
So that's an FY24 story, not an FY23 story.
Yes, yes.
Take that point.
Yes.
And, you also got 700 crores from the AIF. What's the plan for allocating that? And, are you looking at the redevelopment theme in Bombay? Because in Mumbai, your exposure is very limited. But out there, the big theme right now is, and the big theme it has always been, is redevelopment. Are you looking at something there?
So Mumbai, yes, redevelopment very much. To answer on the first one, which is the AIF, we have in fact done the first deployment in a plotted project in Chennai. We have a pipeline of projects. We intend to deploy the first raise by March to May. And all of this is really focused on Provident and plotted development, as the turnaround is very, very quick on these projects. So that's where we headed with the AIF. And as far as Mumbai is concerned, it's a mix of redevelopment, society redevelopment, and brownfield projects as well, which we are evaluating currently. And I think we are going to be consistent in our effort to scale up our business. So we've set up a team, and now we are very, very focused on developing both Mumbai and Pune markets.
Okay. So how much of the AIF money has been used, Abhishek, so far?
We've just deployed 100 crores so far out of the total raise. I think between Jan and March, you will see more deployment coming through, and then we'll make those announcements.
Okay. And when you talk about scaling up your business in Mumbai and Pune, right now most of your business is in Bengaluru. How much more can you increase it to? Say FY24, FY25, how much of your total pipeline will come in from Maharashtra and these two cities in particular?
So our goal is over next few years, the target is that out of Bangalore, which is beyond the Bangalore market, we will get more than 50% of our revenues. And Mumbai and Pune will definitely contribute possibly one of the largest stream. So target will be overall sales numbers. We should look at anywhere between 30 to 35% over next 2 to 3 years time frame coming in from the Western markets.
All right, take that point. Wish you good luck. And thank you for joining in, giving us all those details. Mumbai market definitely fairly competitive as well. Let's see how you manage to get that 35 to 40% revenues coming in from Mumbai as well as Pune. That is the management of Purvankara. With that, we'll step into a short break, come back, get you more on the markets and individual stocks. The weakness for the market continues. In fact, as we speak, the Nifty is at the low point of trade. The Sensex down almost 400 points, and it's led lower by the banking index, which is down almost 1%. When we started the show, the Nifty was 30 points away from the lows of trade. It was above 18,330, and now we've seen a big 50-point decline in just the last few minutes. The mid caps have it worse now, almost 2% shaved off that index. Individual stocks not doing too well either out there. And the stocks that have actually led the Nifty lower, we've been talking about how Reliance has held Nifty, in terms of its support, but Reliance too has moved off the highs. In fact, it's down over 1% from the highs. HDFC Twins have also declined to the low point of trade, and IT stocks, of course, have not been doing too well and currently are weighing down on the index. ITC is the other one which is actually lower as we speak. So all in all, looking like a weak day. The initial bounce back was sold into, and now we've gone below the lows of today's trading session. So let's see where that goes. The Nifty Bank has broken its 20-day exponential moving average and the 20-day moving average itself. So again, let's see where we go from here. But in such a market, one stock which is holding up is Deepak Fertilizers after it's announced a demerger of its mining and chemical fertilizer business. Sonal?
It's a demerger that they've announced of the mining, chemicals and fertilizers business, and it is an important update. The stock, though from the highs of the day, is still higher in trade today. Now, there are two parts to it. There are two subsidiaries that the company has. It's STL and DMSPL. So both the fertilizer and the mining chemical business were under STL. Now there is a demerger of the TAN business or the mining chemicals business from STL to Deepak Mining Services Private Limited, which is DMSPL. So that is the first transaction. The second one is that STL has a subsidiary which is called Mahadan Farm Technologies Private Limited. This will get merged with STL. So those are the two transactions happening. But the bigger one, of course, is that mining chemicals business is getting demerged from the fertilizers business. Mining business, remember, has revenues of close to 2,400 crore rupees. This is as on FY22. That is 44% of the total revenues of the company. And demerger ratio is at 1:1. So, of course, we'll have to watch out for whether these two will be listed separately later on. Of course, more details are needed on that. But the company says the rationale for demerger is simplification of the corporate structure. They want to keep these two businesses apart. One is a fertilizer business and one is a chemicals business. So, makes sense to make them separate as well. Economies of scale, because the raw materials and the processes are different here. Restructuring is in line with strategic shift from commodity company to being a specialty chemicals company. That is what the management has been focusing on for a long time. They're also planning to unlock growth potential in each of these verticals, because though they look similar, they are different from each other. So that is about Deepak Fertilizers. The stock is up around 2.5%, and this is something that the street was not really expecting. So has come in as a surprise, but taken positively.
Taken positively, but not taken positively are all the PSU banks right now. After a big rally, wherever there were profits, they've been taken out now. The PSU banks, just keep an eye out on the PNB and Union Bank stock prices, both of them down almost 5%, and a sharp fall is what we've seen. The PSU Bank index is at the low point of trade. These stocks hurting as well. And with yesterday's decline and today's decline, these stocks have actually turned negative for the week as well after gaining for 10 weeks on the trot. So not looking particularly good for the market. The mid-cap index is now down 2%, 600 points lower. The Nifty Bank as well, like I said, has broken its 20-day moving average, and the Nifty sitting with a cut of 135 points. With that, we'll wrap up on this edition of Chartbusters. But as we do that, also hear out some important market opinion coming in from S. Naren.
If you look at the last month, what we saw was that debt index fund have received huge inflows, and that's something which possibly as a product didn't exist 2 years back. So I think clearly we are seeing a situation that people will consider debt and SIP both, and that will be the change which we will see in 2023. I think the big call will be that inflation will become much smaller as an issue in 2023. And therefore, we are in a situation where multi-assets become very interesting, that you consider all the asset classes. You consider a product like multi-asset, which can invest in debt, equity, gold, silver, REIT, InvIT. You can do everything. Because I think that kind of an asset will become much more interesting, because you're still going to have a volatile year ahead.